I'm very excited about this the next panel here. It's Kinjal, Shah, Peter Loukianoff, Jonathan Nelson of Hack Fund, Kinjal Shah, Blockchain Capital, Peter Loukianoff of many companies, Modern Ventures. Thank you guys for being here. The topic of your panel today is Acorns to Unicorns 2.0. I would love to be able to describe all of you and the extent of your background. I'd spend the whole panel doing that, which would be unfair to our audience. So I'm going to just summarize the top level in the best way I know how. But I'll let you identify some of the points that you think are important that I missed out before we go into to hosting your panel. So Kinjal Shah and I met, this is some time ago now, and what I found really interesting about Kinjal, she's right now on the East Coast, and working with Blockchain Capital has traversed, having worked with Fidelity, studied at top tier institutions, and worked with various enterprise level companies, has spanned the globe in terms of understanding what technologies are working now, what the changes are happening globally. She has a view on those aspects. And so I've asked her to help us moderate this panel between Jonathan and Peter. So thank you, Kinjal, for being able to do that. Jonathan Nelson, if I read some of your content, it's like, okay, founder of the largest global network of tech founders. I mean, 350,000 attendees, 200 cities, 50 countries, 600 million portfolio market cap, for the first 7 years, 72 companies, 9 exits, SEC advisory committee, worked with the White House, education, philanthropy, emerging markets. I know you're on a quest now to help emerging markets or emerging companies in emerging environments get IPO'd in UK and Europe. Amazing, amazing background. Thank you for all the work you do to help these emerging companies and not completely solely focused on Silicon Valley where the herd is. So we're going to be interested in hearing your perspective on what the global environment looks like. Peter Loukianoff, thank you so much for joining us for the first time. This is your first inaugural event at GIC. I appreciate your time and effort. And Peter comes, he spent what, 2.5, 3 decades now working with early stage startups, helping them get funded, helping them grow. He's an operator, provides a lot of strategic advice, mentoring, funding, sees early seed, follows on rounds. You've seen a lot of exits now as well, Peter, within your portfolio of companies over the next, you've got like 2 decades now, and you should be seeing a lot more coming up with this market. So thank you for spending some time with us here today. And what we want to also cover is how we see, alluding to what Bill and Joe were talking about, is how we're seeing the development of Acorns to Unicorns 2.0. When I say 2.0, I mean, how has this transitioned over the last 18 months with the pandemic, and how does this look for the next 10 to 12 months as we move forward, as people are identifying new business models, founders are scrappy now, understanding what their customers look like, catering to a larger audience. So these are some of the questions I hope you're able to cover. 20 minutes, I've taken up a few of your minutes, so I'll give you some at the end. 20 minutes, and give us some time at the back end for 5-7 minutes from some Q&A if you wouldn't mind. Kinjal, your show. Thank you so much.
Awesome. Thank you so much, Kareem. And thank you, Peter and John, for being here today. So that was a great introduction. I guess if there's any sort of more background that you'd like to add, I would perhaps suggest we start with a quick, brief intro on both of your sides.
Excellent. I'm happy to dive in. Jonathan Nelson, Managing Director of Hack Fund. We are looking to take a venture capital fund, a FinTech venture capital fund, public in London later on this year. And we have optioned, I believe, deals in about 15 startups from around the world, primarily global FinTech and InsurTech. And we're also starting an advisory practice in helping companies from emerging markets actually access capital markets in London and the UK, and really starting to actually bridge to be able to help provide growth capital and drive liquidity into these emerging markets and some of the amazing tech companies that we're actually seeing from around the globe. So glad to be here, and I love what LinkedIn do is linked what you guys are doing, and deep respect for what you guys have been doing over at Blockchain Capital for years, Kinjal.
Awesome. Thank you. Peter?
Great. I'm Peter Loukianoff. I'm the co-founder and managing partner of Modern Venture Partners. What we do is we provide high net worth individuals access to the venture capital asset class. So a lot of venture sort of started originally with a lot of individual investors getting involved in startups and working deals and so forth, and it's become much more of an institutional game. So a lot of high net worth individuals, including family offices, have sort of gotten shut out of the venture market. So we provide them access in a broad portfolio approach to venture investing, and alongside top tier VCs that we partner with and co-invest with in various companies. As Karim mentioned, I've been around in venture now for a while and have done a lot internationally. And so I'm glad some of this panel is going to touch on the international aspects, because I think there's tremendous opportunities in the international marketplace.
Great, thank you. So yeah, as Karim hinted at, I think the past 12 to 13 months have been pretty evolutionary for the venture ecosystem. We've all gone from in-person meetings to Zoom meetings, and I think that's really opened up the ability to actually see a complete deal through, and doing that completely remote, and there are implications regarding global investing. So I guess I would love to hear from both of you, how this constraint being lifted and this norm being lifted around, investing locally has shifted over the past 12 months, and where you see that headed over the next couple of years.
Jonathan, you want to start?
Yeah, no, happy to. That has been a deep and abiding frustration of mine, is kind of the hyper-localization of venture capital. And in fact, when I was at the SEC, I did a study for Commissioner Stein looking at why Silicon Valley attracted so much venture capital and why emerging startup hubs around the globe, like Atlanta, Denver, and as a corollary, the rest of the world didn't get venture capital. And the answer is that capital follows liquidity, which is one of the reasons why we're working with public markets in Europe to actually drive some of that liquidity. But I have some dear friends in Silicon Valley who for years would not look at a deal unless they could drive to the founder's office within 15 minutes of Palo Alto. And, if you've ever been in traffic in Palo Alto during rush hour, that that's probably about 5 to 8 miles in diameter. And so you really are limited. But for years, the venture community hasn't had to venture out. What's really exciting to me is that this is really starting to democratize access to venture capital in terms of founders from around the globe. Now that everybody's on Zoom, a founder in Mexico, a founder in Nigeria, a founder in Eastern Europe, actually has the same type of, pitching presence as somebody who is in Palo Alto would. And I believe that is going to be a secular turn, and I think that's only going to be good for our portfolio. Not only that, there's some amazing arbitrage opportunities. Evaluations in emerging startup hubs around the globe are 30 to 50% of what they would be for comparable startup in Silicon Valley or San Francisco.
Yeah, just picking up on that point, I totally agree on the arbitrage. I think in my experience, I did a lot in Eastern Europe and Russia, Ukraine, for example, and the level of talent there is just phenomenal. And they were able to get things done and really compete with some of our best companies in Silicon Valley and do it at a fraction of the cost. And the other thing we noticed is that the stickability, I guess, of the best employees is easier there, because in Silicon Valley, everybody's poaching each other's engineers and so forth and driving up the cost and so forth. And you just don't get that in those kind of markets. They tend to be a lot more loyal and stick with the companies and work things out in that sense. So, I think that's a real positive. And we sort of saw that over and over. And from a return perspective, there's a lot of interesting opportunities for even greater returns given that kind of situation.
Yeah, definitely. And I think on that note, it would be great to also hear, from your experiences, what types of founder qualities do you think are maybe particular to international markets that you think really stand out for really successful founders, or maybe it's, similar across all markets? What does that look like from an investment perspective?
Well, that's actually another interesting element of international, is that I think a lot of the entrepreneurs in those kind of markets they don't have the luxury of just sort of having an idea on a napkin. They really need to show more progress. And so oftentimes what we'll find is companies that have been bootstrapped and have gotten to more like a Series A, Series B kind of level, but they're getting, Series seed kind of valuation. And so it's a seed with a SEED, not C. And so it's a very attractive proposition from that standpoint. And a lot of the technology risk is often worked out of these deals pretty significantly by the time they get to sort of a fundable, fundable profile.
What's also interesting to me about global entrepreneurs is, if you can actually build a company to, $1 billion in gross market volume in Mexico or in Nigeria as a fintech, chances are you probably have a level of grit, determination, resilience, and a toleration for blood, sweat, and tears that's almost legendary. These entrepreneurs are just full of drive and passion. And not to say that Silicon Valley entrepreneurs do not have that. I know that they have it in spades. But let's face it, entrepreneurs from Silicon Valley probably do have a little bit of privilege when it actually comes to being able to raise capital and that sort of stuff. If you're, a fintech coming out of Chile doing $1 billion in, SME financing, chances are that you're going to actually turn that company into something pretty huge, come hell or high water. And that's why I thoroughly enjoy spending time with a lot of kind of emerging startup hub entrepreneurs.
Yeah, that's great. And I think there's definitely something to be said about the grit and resilience in these markets. I guess I'm curious on the liquidity front, one of the biggest challenges I think for any of these emerging markets is that there just isn't enough local liquidity. And oftentimes venture investors are hesitant to invest without having a local partner that they trust or being on the ground. So, what are some ways maybe you think liquidity is going to be potentially changing or growing in some of these markets? What can investors do to facilitate that moving forward?
And so one of the reasons why we're actually starting an advisory practice right alongside of our venture fund is we've just decided that we need to own that whole liquidity experience. And we're working really closely with the London Stock Exchange. At this point, we've talked to 17 stock exchanges globally about kind of small mid-cap IPO process. And I have to say I've kind of drank the Kool-Aid on the London market. They're hungry post-Brexit for global deal flow. They're very, very motivated, and they actually have a really good track record. They just announced yesterday for a startup from Seattle, just IPO'd at almost a $500 million market cap. Costs are a lot cheaper in London. IPO cost compliance is a lot cheaper in London. And we have a pipeline of 3 or 4 companies that we're actually hoping to take public later on this year, so that I don't have to worry about that when we actually make our investments. It's, we just decided that we need to bring our own liquidity with us while we're actually going into these markets.
And I think the SPACs are now changing the game as well. I think there's a lot more SPAC stuff there. So as an entrepreneur, it's actually probably a pretty good exit vehicle if you've got a credible company. And so I can see a lot of these international deals exiting via SPAC, where maybe in the past they'd have to wait to get on NASDAQ or something like that and go through all those hurdles. I think now this opens up a lot more opportunity. And I think there's a number of private equity firms and other sponsors in those markets specifically that are actually raising these SPACs. So I think that's going to create a lot of liquidity opportunity as well.
Yeah, absolutely. I think SPACs is a great point. Hopefully in some ways it's a quicker way to get to the market and get some liquidity events occurring. And there are definitely network effects that build with more liquidity events and investors that can actually redeploy some of that capital. In terms of constraints, what are maybe some of the biggest constraints to global investing that you guys have seen and global liquidity events? Is it, regulatory? Is it just having localized expertise? Obviously, we talked a lot about just like hesitancy to invest and, what the diligence process has previously looked like. But moving forward, what do you think are the main constraints?
Well, this is something I experience a lot, having invested in Russia and Ukraine. And Jonathan hit upon it a bit. He mentioned Palo Alto being, very insular. I mean, even when you can't compare Palo Alto and San Francisco, for example, there are firms that actually it's not that long of a drive, and yet firms actually have offices in Palo Alto and San Francisco. They sort of view those two things as completely different worlds. So with that mentality in Silicon Valley, you can imagine how going to London or Moscow or Bangladesh or something like that, I mean, it's a completely, it's just totally foreign to them. And what was interesting, I was part of a delegation that went over to Moscow back in 2010, totally different, geopolitical environment back then, obviously. But, a lot of the investors, when they came there, they said, our entire perspective was through the Wall Street Journal or what we read locally. And we had no idea what to expect. In fact, they were expecting the absolute worst. And there are some crazy stories about what they expected coming off the plane and all this stuff. And one of our investors said, and this is a Silicon Valley investor who remained nameless, but he said, here I am walking through Red Square at 2 a.m. with my wife. I feel completely safe and completely comfortable. I would never have imagined that Russia is like this from the news that I read in the US. And I think that's the biggest challenge, right? It's just our myopic view of the world being from here, and we don't really understand what goes on in other places. And I think that's the biggest detriment. And so the nice thing now about Zoom and about this whole crisis, and I always think that there's a positive that comes out of these kind of things. And I think one of the things may be this breaking down of these barriers where investors will feel at least comfortable talking to somebody over Zoom and then sort of realize, hey, there's some really smart people all around the world and great entrepreneurs and hungry entrepreneurs, as Jonathan said, that are definitely worth backing. And that's what I sort of saw in general as we were developing our prior fund, is that the internet really is democratized entrepreneurship. So now you can be an entrepreneur really anywhere and start companies and do things. And there's tremendous opportunity out there. You just got to be unafraid and willing to be bold and go get out of your shell and go look for these things, because they're out there. And like I said, the returns are phenomenal, I think, if you find those kind of opportunities for all the reasons we talked about, from a cost basis, from a just technology uniqueness. And I think that's going to be there. The other thing, just as a cautionary note, obviously the market's doing really well. We're all, very excited about what's going on. But there are a lot of investors and entrepreneurs, millennials and so forth in particular. Again, no disparaging here, but just they haven't gone through a down cycle, and so that will come at some point. And I think that's going to be also a great opportunity to sort of see the quality rise in that environment, be ready to pounce on opportunities globally that can get through a crisis like that, and then see the light at the tunnel at the end of it. But that's at least some perspective from my experience.
And in terms of some of the challenges, like I'll give an example. There's a SME financing company that I was advising last year. It was their 4th year in business. They did $120 million of SME invoice factoring. So basically, if a small business in Chile or Colombia did business with Hilton or McDonald's, they would invoice Hilton or McDonald's, and McDonald's would pay them net 90, net 120. And these SMEs in these countries had zero access to any kind of financing capability. So this company, OmniBank, ended up coming in, and within 24 hours, they take an invoice. They say, yeah, Hilton's going to pay this. We'll give you a loan at, over 3 months, or a 5% flat fee. So they had done $120 million of loan in their 4th year of business at a modest 20% interest rate with a 0.5% default rate. Money printing machine. I took that exact company up and down Sand Hill Road, and I had 4 separate VCs. I don't think they'd coordinated because I didn't tell them. They hadn't heard about this company before, but they were like, oh my gosh, Jonathan, this is an amazing company. Where are they based? I'm like, Chile, Colombia, they're going to be opening offices in Mexico. And they paused. Have you seen the show Narcos, Jonathan? Yeah, I'm never going to invest south of the border. There's, crime and corruption and cocaine and all sorts of hairy stuff down there. What can you do with that? I mean, I completely understand, because the press, as Peter said, that you actually hear from these markets is, crime, corruption. But what you don't see is that Latin America is 15% of the world's GDP. It's about the same size as the market as China. In 2017, it received a total of $250 million in venture capital. That's it. $250 million for 15% of the world's GDP. Now, in the last couple of years, I think we're up to about $3 or $4 billion. SoftBank has been pumping some money into that market. But, it's a greenfield. 40% of the people in Latin America have bank accounts, and 15% of them have credit cards. And at the same time, some of the fastest growing middle class in the world, some of the fastest, internet adoption in the world. And, people are very, very tech forward in these markets. There's more smartphones than people in Latin America and Africa. And so there's these huge opportunities. And yes, there's some regulatory risk. Yes, there's some currency risk. At the same time, I think it's actually a great way to kind of diversify people's portfolio if they're a little concerned about US markets getting a little bit overheated, or European markets getting a little bit overheated. I think there's a great opportunity there. And that's why we're excited about these markets.
Yeah, I mean, you raise a great point there in just how far, some of these biases that play a role in investing can permit you from sort of seeing outside of your world lens. And so hopefully some of those barriers are being broken down. I guess as a last question before we go to Q&A and anyone from the audience, I'd be curious, everyone's always asking if there's going to be a new Silicon Valley or what's the next Silicon Valley, whether that's within the United States or globally. We've seen the venture ecosystem, in particular in Asia, really develop over the past couple of years. India is really exciting right now. Southeast Asia, there's been a number of great companies kind of born out of that ecosystem. So I'd be curious on your thoughts on what is the next booming venture ecosystem. Is it Southeast Asia? Is it South America, another market, or do we kind of stay in Silicon Valley?
So I'm very much a fan of kind of a hub and spoke system, and I really see a network of tech hubs. I don't know that anyone is really going to be able to compete with Silicon Valley. I mean, Silicon Valley is Silicon Valley, and it's got a 70-year legacy. That being said, I'm excited about, for instance, Guadalajara. Guadalajara, Mexico has more engineers than all of Ireland. Medellin, Colombia, of Narcos fame, is actually one of the biggest tech hubs in South America. Santiago, Chile. I'm excited about what's happening in Lagos, Nigeria, in some of the FinTech. There's some amazing companies coming out of that market. The Middle East and North Africa, the digital transformation, when you have a group of sheiks who are running entire countries saying, you got to figure out this software thing and this digital transformation thing out. Guess what? All of the companies in those countries start to figure out the software thing. And so there's an enormous amount of kind of rapid acquisition of technologies and rapid evolution. And, Asia has just been, a roaring tiger for years. India, Southeast Asia, Singapore, a lot of amazing stuff happening out of there. But my hypothesis or my thesis is let's just build networks. Let's connect all of these kind of hubs. And, the value of a network is equal to the number of the nodes in the network squared. And so that's only going to strengthen this tech ecosystem globally as we build these networks.
Yeah, I agree. A lot of my career has really been connecting and bridging Silicon Valley to other parts of the world. And so I agree with Jonathan's idea that it's, Silicon Valley is totally unique. That's never going to be sort of, I think, it's going to be hard to replicate that in terms of the history and everything we've gone through. But I think other places are catching up. Like I said, the internet's sort of democratizing that. I think a lot of these financing vehicles are going to enhance the ability of entrepreneurs to be anywhere. But I I've been lucky to be able to advise a number of governments and so forth. And a lot of it is just, hey, get out of the way of the entrepreneurs. Let them do their thing. Because if you put too many constraints on them, that will kill the entrepreneurial market and innovation. So I think the key thing for governments is just make sure that they let entrepreneurs do their thing, that they promote them, that they talk about the winners and promote sort of the success stories, because that will encourage other people to say, hey, I can do the same thing. And frankly, I just think that entrepreneurship is sort of the cure-all to a lot of things that are going bad in the world. We could solve a lot of problems if we just unleash the entrepreneurial potential in people and just let them go build great companies. And that'll be great for everybody involved, including investors.
So Peter, Kinjal, Jonathan, thank you so much. Just a couple of questions and just a couple of pointers. So a couple of different things. One of the questions was, do you see Australia as the next sector for IPO availability and for companies to go public in Australia, and how does that environment look? The second question for both Kinjal and Peter would be, if you look at London has always been considered the financial hub, and then obviously with the EU zone and now the Brexit zone, is that going to create some complications within who's the next financial hub as compared to the US in general? So that would be two questions. And then the third, question is, when you start to look at some of these emerging companies, and I know someone I think it was a company like Zipline, the drone company, one of their first customers was the government of Ghana, who started experimenting with delivery of drugs to the populace. And you start to look at US companies or European companies testing in either Africa or South America. What does this actually mean? Why there, and what does this tell us?
And so I can answer we've looked and talked to the Australia. So my preference in terms of small and mid cap IPOs is probably London #1. The second tier below that would probably be the Euronext exchanges. They have a very strong kind of European bent to them. Also, TSX, I think, is a good candidate for the Americans. And then if you want Asia exposure in terms of your investor base, I think the ASX is actually positive as well. The reason why I like the London exchange better than some of the other exchanges is for small and mid-cap IPOs. I'm talking sub $2 billion valuations. The London AIM market is a lot more broker driven. And so you actually see a lot less price volatility than you would necessarily have taken a small cap company to IPO in Australia or the Euronext. And if I'm a CEO of a company and my share price is, jumping, 20 to 30% every week, that's just going to be distracting. And I feel like the AIM market there is probably a little bit more orderly, and you actually get less high frequency trading and less kind of, GME kind of drama that actually happens on those stocks. And so that's the answer to that question. And in terms of why startups are actually, why emerging markets, and then kind of focusing on the rest of the markets, I'm actually seeing a lot more innovation because of lighter regulatory frameworks along the globe. In Brazil, I'm seeing, mortgage refinance done over WhatsApp, for crying out loud. In Colombia, I'm seeing people purchasing car insurance through text messages and then car loans through text messages on feature phones. The world's leading digital currency manages half of Kenya's GDP, and it's a cell phone minute-based currency called M-Pesa. And one of the reasons why there's a lot more of this innovation, and we're seeing a lot of these markets start to leapfrog the United States in terms of technology and innovation, is because A, lighter regulatory framework, but B, they don't necessarily have this legacy kind of tech infrastructure that the US banking system would provide. And C, like the US and European capital markets and financial ecosystems, it's a $14-15 trillion a year industry. It's fairly well established, and you have some major incumbents that have a vested interest in making sure that everything's tightly regulated and that things don't change a whole lot. You know, and so look at the challenges that Robinhood has had to go through in the last year. And so you don't necessarily see that in a lot of emerging markets. And so you got to kind of balance it.
Yeah, Karim, I don't know if you can see my paper, but I actually wrote Leapfrog and No Legacy. So Jonathan, you covered it. So I don't have anything to add already.
We're in sync, man.
Yeah.
I do want to say thank you. We're at that time, but I want to let the audience know a couple of different things. One is we actually did a little behind the scenes GIC prep podcast with Peter, Kinjal, and Jonathan. That's available on our podcast site at the Global Investor Conference website. It's on the left-hand side, the tabs on the left-hand side. So take a look at that, listen to that, and see what you gain out of it. What we do find is that oftentimes that these are sort of such engaging conversations that we may have to just continue this at a lunch and learn or another podcast, and so that everyone gets to know a little bit more in depth. This is sort of a primer, and I'd like to thank you all three for being with us here today. Please make sure you let us know which companies that we should be bringing to our audience and clients and customers to make sure that we find the right companies for them ahead of time. Thank you, guys.
Thank
Great.
you.
Thank you.